Good day, traders. Stacey Burke from Stacey Burke Trading. Daily currency levels for the British pound crosses Friday, May 29th. Tomorrow morning, 8:30 a.m. New York Eastern Standard Time, we have Canadian GDP. And at 11 a.m., Federal Chairman Powell speaking, and tentatively President Trump making a speech over the weekend. Looking at our pound Aussie again, as we head into the end of Asia and beginning of the Europe session, again, we've been in an extended downward move from the beginning of the month. We're approaching the end of the month. This market, as we demonstrated earlier, has a potential fairly large gap. If it was to fall through the 8,500 level, there's a big space that this market could continue to move through. Currently, we're still not demonstrating any reversal signs. We have stops under the low of the week at 84.52 at the second full expansion from that upper rectangle of the beginning of the month, taking us down towards the 83.84 level. If this market was to make it inside of that next 250 pip level below 8,500, again, there's nothing to stop it so much down to the 82.50 level. When we look at our 4-hour chart, we can see that consolidation after the move down at the beginning of the week with one push, two push, three pushes into the move down. Markets come off of a high this morning in Asia and consolidating just above the 85.50 level. When we look at our 15-minute chart, we can see the peak formations. Actually, we'll back that up from Wednesday's U.S. session highs. Last night's U.S. session swing long into the close at the 85.50 level before that move through the high of yesterday, pinning the high of Wednesday. Yesterday was an inside bar. They've already triggered entry orders at the break of that high of yesterday. Traders who may be trading other time frames or the inside bar break are currently now in the market. They would initially have stops either at the low of yesterday or at today's low. Our peak formation low from yesterday's U.S. session is in place. We have a peak formation at the beginning of the day today, at the beginning of Asian session, at the just below the 8,600 level. The market auctioned below 87.75 and has gone into consolidation in that extended 3-hour window as we head into the Asia-Europe transition. So there are stops below the 85.50 level at that swing peak formation low, 85.44, and of course again down at 85.25, and then all the way down through yesterday's low. This market, if it breaks that 85.50 level, could continue to just gradually work its way down through these levels. We've again possibly have a peak formation high already in place for the day. If the market was to stop on high, taking out that peak formation, we could see a retest of that move back up. But currently, if we break the lows, we could see a breakout pullback for a continuation of that move down. Currently in between 85.50 and 85.75. Next up is our pound Canadian. And again, this pair on the daily chart had a fairly strong pullback yesterday in the U.S. session, coming back to the 7,000 level. So we broke down on Wednesday, Thursday, Tuesday, Wednesday, pulling back on Thursday inside bar. We have stops below yesterday's low at the 68.44 level. We've come up to the 7,000 level again. There are stops above Tuesday's high. And again, if this market was to continue down, we're not really demonstrating a reversal just as yet. We're heading into the end of the month. This market could continue its move down towards that 65.50 level. When we look at our 4-hour chart, again, the market broke down through that 7,000 level before consolidating and reversing off of pin hammer yesterday. And we've moved fast in the U.S. session coming up to that 7,000 level again, but we've gone into consolidation up at that upper part of the box. Looking at our 15-minute chart, we can see there's a peak formation in place from Wednesday's Asian high, a peak formation in place from last night's Europe, London, U.S. transition. There's a swing peak formation in place from this morning's rollover. So currently 1 push, 2 push, 3 pushes into the high. If the market breaks above this 7,000 level, we could retest stops up above that 70-10, 70-25 area. And there's a fairly large gap up top up to the 70-50 area to get traders from Tuesday's U.S. session shorts. But again, if this market was to work its way sideways and retest the lows of today, we could see a fairly fast move back down and a reversal, stopping out traders from last night's U.S. session long. Next up is our pound Swiss. And again, that market pulled back after breaking out of last month's low, consolidated, and then broke back up above that low at the beginning of the week, and we've consolidated since inside of that narrow range. But we do have an inside bar yesterday and a fairly tight consolidation so far as we speak. We have stops above the high of the week, stops below the low of last week's swing low. When we look at our 4-hour chart, we can see again that tight consolidation with stops above the 1922 level and below the 1834 level. Possibly have a 1, 2, 3 setting up as a stop hunt back up. We stop hunted back up yesterday into the traders who shorted the break of the bear pin. But again, a very tight, narrow consolidation. On our 15-minute chart, we can see this a little bit better. Yesterday's range was very narrow, 50 to 75 pips of consolidation back and forth. But one thing that we do see from yesterday's session is 1 push, 2 pushes, 1, 2, 3 on that lower high, and dropping down into consolidation. The market has gone sideways in a very tight range today, hitting stops above that 1880 level. If this market remains underneath of this peak formation and rolls over to retest the lows of the Asian session, we'll just mark that off. We could see a move back down towards Wednesday's U.S. session lows and Tuesday's lows of the week. So again, a very tight, narrow consolidation, but possibly have some peak formations in place from yesterday's 3 pushes and then a 1, 2, 3 as they headed into the U.S. session close. If the market broke higher and was able to get up to the 1900 level, we could see a breakthrough back up towards yesterday's high and Wednesday's high. Next up is our pound yen. And again, this market has gone into a very tight consolidation. We have a double inside bar after the move up on Tuesday. We've stayed fairly consolidated tightly around that 3250 area. There are stops above the high of the week and below the low of last week. On our 4-hour chart, we can see that 3250, 3200 area has remained sort of the main trading range the last few weeks. The market has tested that twice this week. They've raised higher lows. The market's pulled back underneath today. Possible bear pin hammer underneath 3250. We have stops below the lows from yesterday at 3182 and 3162. So again, if the market was to break this out of this upper box, we could see a retest of these stops down to the 3100 level. When we look at our 15-minute chart, the market's possibly had 3 peaks put in place for the week. On Tuesday, Wednesday, and then yesterday with a little micro double top before reversing into the close of the session, consolidating, and then doing a 3-push micro double top and a 3rd push into the peak formation of the Asian session open and dropping down beneath 3250, consolidating, then extending the Asian range and currently sitting at the 3225 level. This market could possibly fall a bit further, then stop hunt back higher for a measured move back down towards yesterday's and Wednesday's lows. Possibly could see a fairly large move on this pair if it was to start to drop. But again, we may see this market drop a bit further, stop hunt higher up towards the 3250 level, taking out the lower level shorts for a move back down through the peak formation low. Next up is our pound New Zealand. And again, this pair on our daily chart, we were in an extended move down from the breakout of that rectangle at the beginning of the month. Market pulling back today so far. It broke through the pin lows from back in March. We're currently a breakout pullback, retesting that breakout in a tight consolidation after a second full expansion. If the market was to move lower today and break through that 97.50 level, we could see it continue its downward move. We have stops all the way down through that 9,600, 9,500 level from swing low peak formations back in December and January. Currently not really seeing any signs of a reversal. That was an inside bar yesterday. Inside bar traders are in the market, but again, possibly still may see a retest of this low, whether it's today or Monday, Tuesday, as we head into the beginning of the new month. On our 4-hour chart, we can see that this market again had that pullback last night, moved up strongly, but has since gone into a fairly tight consolidation. They hit stops above the pin. Again, no real evidence of a reversal just yet, but more so of a pullback into that move that rolled over and dropped down from that 99.80 level. On our 15-minute, we can see that reversal last night from the U.S. session, taking out stops from Wednesday's U.S. session high. When we just zoom in a bit more, we can see that this market's possibly had a 1, 2, 3 pushes into the peak formation. Now again, we'll just scroll this back and look. You can see that breakout of the rectangle from the low of May 20th. The market has come back up to that level and had the 3 push pattern underneath of that rectangle. So again, if this market was to retest the lows of Asia, we could see a continuation of breakout pullback for a measured move down, retesting the breakout traders from the U.S. session as possibly as well as the low of the week. And lastly, our British pound. This market popped up on Tuesday and went above the 2,200 level. We had a double inside bar yesterday. We've just currently consolidated tightly above that breakout back inside of that 250 pip box. Double inside bar after a large move up. But again, this market does have stops above the high of the week. This market has stayed very tight ranged yesterday, a couple big days, but generally speaking has been fairly tight in terms of its range. On our 4-hour, we can see that 2-pin tap in the bull hammer yesterday before reversing and coming back up and then going into consolidation. Again, there are stops above the high of the week up at 23.62. If the market was to move through these levels, it could certainly move back up towards the highs of 2 weeks ago. If it was to roll over or retest that lower box at 22.50, we do have higher level stops, higher lows and level stops all the way up for that, which could make it a fairly rapid move down if this market did roll over. On our 15-minute chart, we can see the peak formation up at the 23.60 level, and this morning's peak formation low are basically the zone that we're trading in currently. So it's about a 35, 40 pip box. We're working the high, the swing high of the U.S. session yesterday. Traders have gone up fairly quickly off of that peak formation low. The market, if it was to continue and break through, we could see that continue to trend, but the market may pull back and retest this level from yesterday's high at the 23.44, 23.50 level. We could see that market come back down, stop hunting traders who are long, and possibly retest the low of today, as well as the U.S. session longs above the 22.50 mark. Just in closing, a quote from Steve Clark: do more of what works and less of what doesn't. We talk about just identifying a couple simple setups that show up frequently enough, really understanding the different variations and nuances that they can present in, looking how to master those setups, executing your process flawlessly, and then scaling them up as your results dictate. Have a great trading session, traders. Study hard and trade well. Cut your downside, ride your winners, and have a great weekend.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.